Welcome back to the channel. Not a great day for the crypto market, I'm afraid, guys. We've got Bitcoin down 4% nearly, Ethereum down just under 5%. We've got the rest of the market bleeding along with that. So let's have a quick look into the charts and we'll do a bit of analysis and see where we are. We're starting off on Bitcoin. I've pulled up the daily chart on Bitcoin here because we've currently failed a major level of resistance, and what we said with these upwards rising wedges here, if it's following a downtrend, then it's a bearish pattern, complex pullback, what's called. So you've got your high, you've managed to make a new high, and then you're coming back down to test the lower levels. And you can see if we do get an equal measured move here, we're looking at stupid levels with Bitcoin. That's why I don't think that we will. Personally, the number that I'm hearing quite a lot of is the 21,000 level, and you can see that that coincides currently with where the 200 weekly moving average is being built up here, and the 21,000, and a big capitulation event down to 21,000 would wipe out any liquidity in the market as far as longs are concerned, and there'd just be a mass panic and uncertainty. You get loads of sell orders being triggered at these lower levels, and the bears will just do their thing and bring the market right back down to rock bottom. Everyone will lose confidence. People will be able to accumulate, any investors and anyone that's holding a large amount will be able to accumulate at these lower levels, and the chances are you'll be in a sideways range for some time whilst they get a chance to accumulate and then reset the market for a new run. So just watching at the moment, and it's looking like Bitcoin as well. It's failed such a large level of support on the weekly candle, and we're looking at coming back to levels of around about the 31,000 level, and possibly back down to test the new lows of just under 29,000. If we do get to test the new lows and we get the big capitulation that people have been talking about, selling may walk away capitulation, then, and we do get the close below that, then it's pretty much game over short term. So if we do get lots of buy orders and buying pressure, and this gets managed to be pushed down below the previous lows back in June 21, and the buyers, the bulls, keep buying and buying and buying and manage to push the wick back above this level, then that'll be fine, and we can come back and have another test and fight and live to fight another day. So we're watching and we're observing. As far as trading is concerned, it's certainly not something that I'm doing at the moment. I'm just looking at opportunities to where I can buy at strong levels of structure incrementally. So that's Bitcoin on the weekly. If we have a quick look on the daily chart, we're on candle number 4 now, bear candle number 4. So this is the day that the Fed meeting happened, and there was all calm. We were only going to put it up 50 basis points. They rallied it up. A few hours later, the bears smashed it straight back down. Uncertainty, and we're coming back to test these levels here now. So levels that we need to hold to get back in and reverse bullish, not reverse bullish, but have a chance to reverse bullish, would be the 37,000 level. So if we can manage to get back above and back into this channel, we can continue to try and see if price action can push back up again. But I mean, you see on the daily, the 200 daily moving average, that's creeping downwards now, and you can tell that there's bearish action happening. So likely to come back and test these lows here. I'll try Ethereum next. Same with Ethereum, you've got your big capitulation wicks indicated here, and we've got the bearish full-bodied candles coming down. So the bears are winning this price, where the bulls managed to push price action back up here. The bears are managing to win and push strong bearish candles back down to retest these levels, and we're likely to come back and retest these levels here. So support in Ethereum is currently sitting at just under 2,400 and 2,300, just under 2,300 is the range, and we're currently sitting at a level here where you've got some strong support, but the main levels are down here. So watching on Ethereum again, we'll have a quick look at a few altcoins and see how much they've bled. AVAX, AB, your A to your B, your B to your C leg, and your C to your D leg, equal measured move that we mentioned. It'd end up around here, and it's looking like it is coming back. And if we don't manage to hold this level here, which coincides with the previous low back in January, if we break below this and close below this, we're coming back and we'll be testing the levels of 44.60 at the very least, and possibly back down to 38.09. So quite a high range there as far as AVAX is concerned. And if I was looking at dollar cost averaging into this within our strategy, go and have a look at our strategy. We just got step 1 out and step 2 is coming out later on today, but it's a bear market strategy, and what we'll be doing is we're looking at buying incrementally at levels of structure. So it's not financial advice, you have to have a full system in place, and that's what we're looking to, is to bring structure to your trading. So it's we're going to basically give you the tools to be able to do it yourself. And like I say, on AVAX, we're coming back to test these levels again by the looks of it, if we can't hold this previous level of around about $52. So that's AVAX. FTM, we've talked about FTM quite a lot on the channel, and we've come back and we haven't actually made that new low that we were talking about. We said we need to hold this level. The problem is it's bled so much phantom. It was at $3.50 previously, and we're looking at 69 cents at the moment. So we're coming back and we're retesting this low here. I said that we were likely, if we did get a break in the close, we can look for testing these levels here. We've tested this previous level and we've come back and we're testing this level of support now. So this has acted as resistance, and we can move this up as a resistance level now. And you can see that we're possibly going to be trading in a range here. So if you're trading, or if I was trading Phantom, I certainly wouldn't be trading in counter trend anyway, certainly not a long. If I was trading Phantom, I'd be looking for some form of a reversal, and to get the reversal, I'm afraid guys, you're going to be looking at levels back up here, which is the $1.64 to get any kind of a confirmation bullish reversal. So you've got absolute massive levels of resistance that you're going to have to break through to get to those levels. But the thing is, if you do get some positive action and you do get a bit of volume in the market, similar to this spike here, the Fed spike, you could make quite a big percentage gain. But this is high risk trading, counter trend, to be honest with you, at these levels. So yeah, we're coming to test these levels, and as I said, went a little bit off kilt there, but what I was saying about our strategy is we're looking at levels of structure support, strong structure support, and we're going to be buying in small amounts incrementally. And what we overall want is not the price to go like this within our strategy. What we actually want is, we want price to go, so we'd buy one, failed through. This is a good thing for us because we can manage to get it at the 42, come back, failed, and we can manage to get it at the 26. So we're looking to bring our average down and give ourselves enough time to be able to keep bringing our average down to a certain level that when the market's reset, we've got an advantage over the rest of the market because we've already positioned ourselves, got our averages down, and we would be up even before the next bull run. There's also additional rules that we have to comply with as well, which if you watch the actual strategy, you'll be able to look at those rules. So that's Phantom. Solana's a big bleeder as well, and we're seeing a little bit of strength, actually, a bit more strength than what the previous ones that we've been looking at, that it's holding at these levels here. So the level we don't want to break on Solana is 74.92, a big break and close below 74.92. We're coming back to test the $57 level, which is a huge downside for that. So just wait and see on Solana. We got a breakthrough here, and then we could start looking at testing these ranges. So the way that price action works is you've got your downtrend, your outside return, and then what happens is the market's pushed down, the bears are winning, and we need to come back and test that level of confirmation. So we've come back, we've tested this area as confirmation. That's acted as confirmation resistance, and we've come back now and we're testing these levels here. So fail these levels, we're coming back. That's like I say, we'll come back and we'll end up testing that. Come back, see if that acts as resistance, and then back down to these levels again. So one more Cardano, and it didn't actually quite make it. We had our box of resistance up here, and we were speaking that before the day of the Fed, if we got positive news, we'd be coming back to test these areas. We just slightly missed this area here, and it got slammed straight back down to test these as a double bottom now, and whether we hold this level is another thing. So Cardano's back at levels of 74 cents at the moment, and it's at a point now where it is tested, and we need to find out what it's going to do. So I mean, if you look at levels between the trend line that we've got drawn in here and the level it's at now, it's 18.27%. And within our system, these are just hypothetical lines of resistance, support, sorry. With our system, we'd be looking at a small amount here, see how the market reacts. If it comes back down, a small amount here, if that acts as resistance, we'll be looking back at these lower levels here. And we're not going to be buying resistance, we're going to be buying support, so strong levels of support, and we're going to be bringing our average down over a period of time at levels of structure and at levels when the market is oversold. So the opposite for dollar cost averaging out of the market, and we have one rule within our strategy as well, which is you're not allowed to buy unless the market, or unless the asset that you're looking at is 50% below its all-time high, which means that you're never ever ever going to buy a top again. So that's one rule that we have to follow. I'm not going to go through any more, guys, but it was just a quick market update. You don't see too many of the market updates on a Sunday, so this market's bleeding today. It's not looking great, and we need to find out in a lot of these tokens whether we're going to hold. So a few of the altcoins are holding the levels of support at the moment, but if Bitcoin slams through and we have that big massive horrible capitulation event or price action slam to the downside, then we just need to be careful with the altcoins, because they're probably not going to hold their resistance levels. Enjoy your day, guys. Bye now.